You ever see a stock just explode and wonder, did I miss the rocket ship or did I just dodge a bullet? Well, today, we're going to decode the signals behind a massive stock surge to figure out if it's a sign of true strength or a serious warning. So the stock we're talking about is Devolver Digital, ticker DVLT. And recently, it didn't just climb a little bit, it absolutely launched, soaring an incredible 52%. And get this, that wasn't over weeks or months. This was a massive, explosive move that all happened in a single day of trading. Pretty wild. So you gotta ask, what's the real story here? Is this a sustainable rally or just a flash in the pan? To find out, we have to dive into the technical data, and what it tells us, well, it's surprisingly two-sided. All right, let's get into it. And to really get a handle on what happened, we first need to appreciate the sheer scale of the activity on that day. Okay, so the stock closed at $3.42, a huge leap from $2.25 the day before. But here's the key thing. That price pushes it right up against its 52-week high. For traders, that is a huge psychological barrier, and breaking through it can mean even more momentum is coming. And believe me, this was not a quiet move. Just look at the volume. Nearly 198 million shares traded hands. That's almost 4 times its normal average. When you see volume like that, it means the market's attention is laser-focused on this stock. So, to recap, a massive price jump on huge volume. That's the headline. Now let's dig a little deeper and look at the underlying technicals that suggest this surge might just have some really strong legs. First up, let's check the trend with moving averages. They're basically our go-to for cutting through all the daily noise to see a stock's real direction. And in this case, that direction is crystal clear. And here is the crucial point. DVLT's price of $3.42 isn't just above one average, it is blasting past all of them, short, medium, and long term. A breakout this clean is what traders live for. It's a powerful, textbook bullish signal. And what you're seeing here is like an entire dashboard flashing green. It is not just one signal. You've got momentum indicators like the MACD pointing up, volatility indicators like Bollinger Bands being shattered, and trend strength indicators confirming this is no fluke. The evidence for a strong bull case is definitely piling up. Now, with all this incredibly positive data, you'd be forgiven for thinking this is a guaranteed home run. But, as with most things in the market, it is rarely that simple. So let's flip the script for a second, because for every one of those green lights we just saw, there's another indicator that's flashing a bright yellow warning sign. And that makes this picture a lot more complicated. A simple way to picture this is to think of a sprinter. They just set a world record, which is amazing. The momentum is undeniable. But they can't just immediately line up and run another race at the same speed. They need to recover. They got to catch their breath. In market language, this is what's called being overbought. It just means a stock has moved up way too far, way too fast, and the buying pressure might be reaching a point of exhaustion. A pullback could be just around the corner. The classic indicator for this is the Relative Strength Index, or RSI. And as you can see, DVLT's RSI is sitting at 72.04. Now, the traditional line in the sand for overbought is 70, so we are officially in the warning zone. And this captures the dilemma perfectly. On one hand, a high RSI like this confirms the incredible strength and speed of the move. That's a sign of powerful momentum. But on the other hand, it's also a big warning light that the engine might be overheating, and this pace just isn't sustainable. And it is not just the RSI. A whole panel of other momentum indicators are deep in the red zone here. They all measure slightly different things, like speed or money flow, but they are all screaming the same message: overload. The buying pressure has been extreme, and a pullback could be coming soon. So, what do we do with this? We have one set of data that's screaming full speed ahead, and another set that's urging caution. How do we weigh these conflicting signals against each other? Well, here it is, the bull versus the bear, laid out side by side. In the bull corner, you have overwhelming strength pretty much across the board. But in the bear corner, you've got a chorus of warning signs, all suggesting this run might be on borrowed time. Okay, so this brings us to the most practical part of our analysis. Given all this conflicting data, what are the key things to watch for that could tell us which side is actually winning this battle? So, it all comes down to a few key levels. For the bulls to prove they're still in charge, the price must hold above that 199 support line. If it breaks below that, the bears are likely taking over. This makes the third path, a period of just trading sideways, what traders call consolidation, may be the most likely scenario. Think of it as the stock just catching its breath, letting the pressure cool off before deciding on its next big move. So what is this 52% surge? Is it the beginning of a powerful new uptrend, or is it a final, exhaustive burst of buying right before a correction? In the end, the data doesn't give us a crystal ball. What it gives us is a battlefield. On one side, you have the undeniable force of a massive breakout. On the other, the powerful gravity of a market that's just gone too far, too fast. This isn't just a chart, it's a tug of war between momentum and exhaustion, and the winner is going to determine this stock's fate.